Welcome everybody. It's your first time. This is Game Plan Sunday, February 17th. This is our stock market strategy session where we actually take a look at the markets, take a look at past events, current events, and events that's coming in the future. And then we actually develop a strategy plan of how to, basically generate some income for the week coming forward. And this is basically a good framework for you to be able to dive into the markets and identify quick setups. The markets do change throughout the week, so sometimes you do have to, basically modify the setups. But for the most part, our setups, they pretty much work out pretty good. So with that being said, following last week, the developments that we had from last week, well, the markets was actually booming. Markets was up pretty good. We had like a few choppy days. I think it was like Friday or something started off choppy, but it still turned out green at the end. We had basically from the prior weeks, there was a lot of political unrest. We had government shutdown, the longest government shutdown ever. But the markets basically rallied through that because there was a suspension for 3 weeks that, Trump and them did like a deal just to, get the workers back working. And Friday, basically, the deal went through for Congress, basically. Now, he didn't get his wall money. He actually filed it was a national emergency to get the monies. So it's still going to be some tension in that area as they're going to, file lawsuits and all that other kind of stuff. Our main concern is how does this impact the markets? How does it make the investors, the money move in the market? So that's what we're looking at into these things. So we don't play too much into the politics, but if it has an impact on the markets, then we definitely want to keep our eyes on it. So there are other developments around that are impacting the markets in certain ways. Certain things that you guys definitely, want to know what's going on. So anyhow, with that being said, we have that issue that's been resolved. And so that's kind of like helped the markets to ease up on fear. So again, we have degrees of fear and degrees of greed, as you would say. It's not really a binary thing. It's not either hot or cold. It's kind of like degrees if you take a thermostat. And so when these things start to, become alleviated, then the degrees of fear start to dial down. And then you start to see investors bringing more money into equities. So equities, it's a little high risk here. So you take on more risk when there's less fear. That's the general notion. OK, so when you see things like the rally in the market, let's take a look here at the S&P. If you guys can see the let me actually take you guys on a weekly. Oh, that's a monthly. Let me go to the weekly here. All right. So as we take a look on the weekly charts here, we see that ever since the December lows, which we caught back here, to this week here, it's 8 bars, so it's 8 weeks, 8 weeks of uptrend. The markets have rallied every week, piercing through overhead resistant levels. OK, and that's very interesting to see the markets, come through after those December lows. Now, the thing that's interesting about these December lows is that you got to understand that the were basically pummeled. The whole markets, that correction was so steep. And, fortunately, for us traders and Wall Street Jack Boys members, everybody has this indicator. You can see things like that line right there. OK, these are invisible. You don't get these. You don't see these naturally on the platform, but our platform, our setups actually show us these lines of resistance and support. So we have like these lines. And the markets actually behave toward these lines, basically. These are significant levels here. But we saw coming off of that December low up until now, the rally up. OK, that has been very significant. And what this rally, how we got to this rally is basically the Feds is the main culprit. So you guys know how the Feds basically impact the markets. Excuse me, make sure I got you guys on Facebook at the same time so I can see what's going on. Anyhow, so basically with the Feds easing up off of interest rates, OK, interest rates is the biggest thing that impacts the markets because the Fed is trying to cool off the market because it's pumping super high. And they're like, oh, we need to calm it down so that we don't have, inflation issues and stuff. And so anyway, the interest rates went up super high, and Wall Street wasn't happy about it. And so therefore we got that downpour. You got all, you know, all this nastiness right here, all that sell off. And then with the Feds, you know, basically supposed to continue their aggressive approach to raising the interest rates and reducing the balance sheet at $50 billion a month. Wall Street and, you know, a lot of financial analysts is basically telling the Feds that you've been wrong. And so what happened was, you know, a couple weeks back, the Feds announced that they are basically going to stop raising the interest rates. They putting a pause on it, right? And so that impacts the financial markets because, again, the cost of doing business is not being impacted negatively. When the Feds stop doing what they're doing, then they can actually, you know, lend out more money and companies can borrow more money. So a lot of corporations, they use debt so they can grow their companies. And so anyhow, it just makes it easier when the Feds are not messing up the money. So sometimes you may hear me say the Feds are messing up the money. Feds are messing up the money, I mean, they're raising the interest rates. When the Feds stop raising interest rates, okay, or reduce interest rates, then you see the markets go up. And that's why we had that nice bull rally under President Obama, because the Feds reduced interest rates to zero. So you can borrow money for free, basically. I mean, it's zero, you know, you ain't paying no interest on it. So that's the best time for you to borrow money. For corporations who need debt so they can grow and compete with other companies, they just rally up on all of that. Anyhow, so with the Feds raising the interest rates up to like 2.5, you know, that December thing, that's what happened. Wall Street just wasn't happy about it. So then Powell done come out was like, hey, you know, well, we can make some adjustments, you know, quicker than what people may think. And so you caught the rallies. Every week you can see how the development came. It was basically Feds just like, hey, we're going to, you know, chill out on the interest rate. So we just got that the last meeting that was, I think, a week ago, could have been 2 weeks ago. So but basically they're saying that they're just not, they're going to put a pause on raising interest rates. So Wall Street rallies, and then you get when Wall Street rallies, because the Feds is not messing up, the fear goes away and the bullishness goes up. And so it's like, hey, man, I'm gonna put some more risk in the markets since the Feds is easing out. And so that's why we had the strong pushes through these resistance levels. Okay, because now we're seeing fear easing out. All right. And you guys know the Oracle of Omaha, Warren Buffett, one of his famous quotes is, you know, buy when they are greedy. No, he says sell when they're greedy, right? Was it buy when they're fearful, sell when they're greedy? Yeah, I think that's the quote here. Anyhow, so that's basically how it works. And coming up this week, man, he's actually going to be releasing his statement. I believe it's on Saturday from Berkshire Hathaway to all of his investors. And this is a big thing, you know, for the market. So if this is your first time, you know, it's Warren Buffett. He's the big guy, right? So he talks, people listen, like his word hold weight. And so anyhow, Saturday, they're going to release that to his investors. And basically, we had a glimpse of his portfolio from this past December. I shared it with you guys in the group. Did y'all get a chance to see Warren Buffett's portfolio that I shared in the group? Did y'all find that interesting to be able to see what the big dog is holding, what he's buying? Like, it'd be great if you can like trade like Warren Buffett, right? And by the way, he's like the biggest options trader out there. Anyhow, I mean, his portfolio is up like, I think 71%. And that's pretty awesome, man. Anyhow, so a lot of investors will be paying attention to what Warren Buffett has to say on Saturday when they release it. I get a copy of it. I'll share it with you guys, most definitely. But what was interesting, what we did learn is that Warren Buffett, man, he reduced some shares. It's not necessarily him, but the company, but he's the chief. So again, they reduced their holdings in Apple. That's not a good sign, right? He reduced the shares in Apple, but he actually increased his holdings in the financials, which are the banks, which that's very interesting to see the guru, the Oracle of Omaha, putting all this money into the banks. And so one has to kind of try to figure out, why would he be doing that, right? And you may never know, but know that he's doing it for some great reason. We don't know what it is, but we definitely have to keep our eyes on why would the Oracle of Omaha be investing in these financials, right? And so That was from his portfolio holdings as of December. And again, by the time these things get to the general public, the moves is already made. Again, they don't want everybody seeing their moves because you try to piggyback off of them. So it don't get released till months afterwards. Here we go 2 months down the road, and now you finally get to see, what he's doing. So right now he's doing other things, right? So anyhow, but it's still good information to keep your eyes on. What else we got coming up? Earnings is going to be lighter. You guys already know we already hit the major companies from earnings. It's been like mixed reports. I did see that there was some concerns about retail with the numbers being so low with sales, and retail I think has been it hasn't been this low since like 2009. I think some of it came from the government shutdown. Anyhow, so there's going to be some developments in retail. There are some setups in retail, but I really don't want to touch it just because I'm not too sure how the market is going to receive, these numbers from December sales being so low. But anyhow, that's going to be interesting. What else we got? So this week earnings, I know we got Walmart coming up, and we got Walmart, we got CVS, we got Domino's. I don't even know if y'all play Domino's, but then those are just basically the major ones. So it's really not anything substantial on the board for earnings. You got Hershey. Yeah. Anyhow, the Feds, they're going to be releasing their minute statement from the last meeting on Wednesday. So a lot of investors are waiting to get their hands on that to see what the Feds had to go, what the Feds had popping off in that. And then, so you'll start seeing moves come from what the Feds was talking. Again, they have these meetings. You don't get the information until, weeks down the road or months down the road. So anyhow, from January, we want to see what they had to say on Wednesday. And the markets will react based off of that information. So with that being said, let's take a look at what we still got the March 1st deadline for the trade deal with China, US, and hi Lucretia, how you doing? What's up, everybody? What's up, Nisi, Yathar, Topaz, Terry, Keith? I see you guys. What was I going to say? So basically, trade deal with China and the US. That's still on the calendar for March 1st. So keep that in mind. Investors are keeping their eyes. This is basically the last big thing that's weighing over the markets because government shutdown, that's pretty much alleviated. Now we have trade deal. And the thing is trade right now, there's been a lot of positive reports on it. I don't know if it's just to keep the markets, together and intact, if it's something real or not. But so far for what we do know is that the development on the trade with the trade deals is, it's going positive. And so there should be a deal going through. Now, we'll say that the company Huawei, they are in the spotlight, and I haven't done much studies on it, but maybe you guys can take a look at it. But there's a race for 5G. So again, I can be a bit of a conspiracy sometimes. OK, but I do believe that there's truth in conspiracies. I don't really know. I'm not going to say it's true, false, whatever the case, but you just, you keep your eyes open, see what's going on. So as we were talking earlier, where Wes was talking about artificial intelligence, well, there's another big thing that's really going to positively impact that whole system that we're moving into, and that's 5G. As y'all know, we just got 5G released. But that's the new development where all these telecom companies are trying to get, in on the 5G development. And Huawei, as y'all know, is like the biggest in China. And their CEO was locked up by the U.S., held in Canada. There was a lot of tension on that. The markets actually dipped on some of that news. But basically, she's like the daughter of one of the highest guys in China, something crazy. She's the CEO. Anyhow, they're really trying to thwart their efforts with 5G. So basically, the U.S. is, Vice President Mike Pence he's been going around speaking and stuff and trying to stop these other countries from allowing Huawei to be able to further the development of 5G. And as you guys know, the Chinese market is actually under a lot of pressure. And the only market that's really popping is US. So US is stronger than everybody else's market right now. Y'all see the stock market is going up, right? But we still got the emerging markets that we also have to keep in mind, hindsight while we're trading, that we still have risk. And that risk comes from the other countries. So China, you got Europe. I mean, you already got a recession over in Italy. All those countries over there are really suffering, actually. And most of the weight is coming off of China. So that stuff can actually end up bleeding over into our markets. At the same time, make no mistake, U.S. market, can weather pretty much any storm to come. We're loaded. So you hear Trump and Pence and them going real arrogant. They know the numbers. When you see them acting like that, they know something that you don't know. So just make sure you pay attention. Like, why are they so arrogant? They saying the whole world slowing down. Why they still going to raise tariffs? Why they, still doing all these things? Because we got the upper hand. And this is leverage that they're doing. They're using leverage to put pressure on China so they can actually get the deals that they want to get done. So that's what it's all about. So just keep that in mind. If you're thinking about playing Chinese stocks, I know somebody in the group posted something about JD.com. Yeah, and they may have a setup, but just keep in mind the overall risk in China right now is just not good. So do I want Asian exposure right now? No, I don't want no Asian exposure right now. If the trade deal goes through, depending on the details of that trade deal, I mean, that could be positive for the Asian markets. The Asian markets actually need that deal. So because right now, if it don't go through, it's really going to negatively impact them, in a huge way. So anyway, we got to keep our eyes on that development. Which again, March 1st is the deadline on that. So we may not see anything immediate this week coming up, but the following week, definitely, I think we're going to get some reaction from the markets from that. And that's the biggest thing here. So now that we have those things down pat, taking a look at the markets here, as you saw, this was the S&P 500. And as we see, it's trying to make its peak against through the 200 moving average, which is another key resistance level up above. And so that is an interesting position because that's where you want the markets to be, for your portfolio. This is really good. Let me see if I can show you guys something. OK, here we go. But keep in mind, the markets are extended. OK, the markets are extended. If you look at this line here, that's anything that peaks above this, that means that it's overbought. So the prices are overvalued. OK, so you don't really want to buy when you see anything at these levels. OK, and down here, it means that it's oversold. That means, hey, they did too much with that selling. And now we're going to be able to get some stocks at a discounted rate. Right. So anything that's outside of these bounds here. So when I'm trading, some of the things that I take a look at is whether the stocks are inbound or out of bounds. OK, if you got an RSI, set up with stochastic setup, then you can actually see these bound levels. So anyway, just keep in mind, yeah, we're breaking above that key resistance level. However, we are at a extended level. OK, and I mean, this is still good because we came from this low to here to up here to these highs. And let me just show you something real quick, if I can. The system is moving a little slow here. I'm gonna take you guys back to the weekly charts. All right. So pay attention to this because we're at a point that reminds me of 2017. Actually, it's kind of weird. Even though we're coming off of this low down here. Even though we're coming off of this low and we're up, going up to this high. OK, as you see with my marker here, I'll just redraw that line so you guys see it. So from here to here, this is where we are. That's 8 weeks. OK, and that's we're like 18% right now. But let's go back to 2017. All right. So we take we could take probably, let's take the last day. All right. And then we go to this day. Oh, no, this day here. All right, cool. We'll go from there to there. All right. So 357 days. I mean, that's pretty close to a year, right? 365 days in a year. A whole year. 2017 was beautiful for the market. So if you guys are trading, I mean, that was it. Probably saw a lot of millionaires come out of that, right? 18%. You see, but it took a whole year to get to the 18%, right? And then the markets fell. The markets, they continued to do what they did, but they fell off, and you went all the way down here, lost all that money. All right. And when we look from here to here, we see another 18%. All right. So this rally that we're actually experiencing right now, if you see 2017 timeframe to 2018 was super bullish. I mean, you didn't have much hiccups. You just played long and you were good to go. We got all the hiccups in 2018. That's when volatility, the fear came into place. Got a lot of sell-offs. You see all that red choppiness. That was crazy. In comparison to 2017, you guys can see that was smooth selling, just going straight up. You just buy any S&P 500 stock. Basically, you were going up. And it took a whole year to get that 18%. Here we go. 49 days into, not even 49 days. It's actually been, I think, a little less. But if I'm looking from the lows, in comparison to the low, that's 49 days from the low, from December lows. We're already at the 18% right now. Okay. And I think that this is a significant level in comparison. The market likes to behave us towards certain levels. Okay. And so what I believe is that we're going to see some more upside as risk starts to leave the markets a little more. Again, we got Feds easing rates. We got government shutdown being, alleviated. And then we have a trade deal with China that's looming up ahead. And the development on that is actually positive. And so, all of these positives, in place, I can only see the markets continue to go up more. So I got my next level up above here, which would be my Fibonacci extension, the 786 for the S&P 500. So, I mean, this is where I'm projecting for things to go right now, which would be better than the whole 2017. So even though the chart doesn't look great, and when you're looking at all the choppiness, when you actually take a look at the move from the dip to now, it to what we got for the whole 2017, all in freaking 2 months. You know what I mean? So that's interesting. And with that being said, we're going to take a look at bonds also, because I think we're a little early on bonds. So yeah, we were a little early on bonds here. But as we see, I mean, we do have, if you're looking at this weekly chart, there's a pennant play that's, set up here, excuse me, on this one here. But, it's up against this key resistance level, and we do see momentum starting to drop off. Now, if bonds go down, then that means equities go up. So stock market go up, the bonds go down. So you see these levels, these two levels are overlapping, my Fibonacci extension and that 100 moving average. And we saw bonds come through, basically tested it several times, did not pass. Here again, we'll see if they, have enough, momentum to push through. But right now, we do have that resistance up ahead. And so if the bonds, go up, then financials, banks, everything go down, the markets go down. And so anyhow, I want to take a look at it from Warren Buffett's perspective, since he's actually buying banks. I don't think the Oracle would be buying banks if he had any insight that the bonds will continue to go up. So anyhow, that's why we talked about that earlier, because if the Oracle is buying banks, then I believe we may get stifled out here on bonds. So if you look at to the daily, there was a squeeze setup that we talked about last week, and we saw that it did get rejected. So again, there's no entry until your buying entry, right? But we have resistance levels up ahead. So we say, hey, we called out the setup for it to be bullish because it was a squeeze. Everything looked pretty good, but it never cleared resistance. So that's not your trigger to get in. You want to make sure that it clears resistance level before you get in. So if it never clears, then it's a setup that you will never get into the long side. You want to wait till it actually gets there. And so anyhow, we'll see how this plays off. Any downside to the markets, okay, then we'll go back to that setup and we'll go, trade TLT. So you'll go look at TLT and bonds. All right. So that setup will, you'll just come back and into this setup, once it clears. Okay. if there's any downside to the markets. But since everything is pointing bullish, we want to take a look at some bullet setups. And if you guys take a look at my watch list, I just pulled the ones that I got over here on the side. This is my Dow scan here. So looking at the Dow list, and you guys know my squeeze setup is here. Squeeze, anything that's, on my daily squeeze, I'm definitely paying attention to it. So if you're watching the replay, you can just, hey, what's the one with the squeeze? I'm not going to go through all of them, but just a few setups before we close the session. So United Healthcare, that's one that showed up top of the list. All right, so United Healthcare showed up top of the list. And the setup is, pretty easy to see this cup and handle situation here. So this is a pattern setup. I haven't been in here in a while. That's, the cup, and that's the handle. And then what you basically look for with this pattern is, upside. And so anyhow, we have a pattern set up, and we do have buy triggers. We do have a squeeze set up, and that's a fresh squeeze. So it may get a little pullback starting out. But if this thing goes through, then we're looking for upside. So I do have that on the list. It showed up in the scanner, and that's one play that you can look forward to the upside for this week coming up. JP Morgan. Okay, a similar scenario. Pattern looks the same. I don't know if Ron is here, but he's like the freaking cup and handle expert here. Anyhow, you can see these setups. I mean, they just speak out at you. You can kind of see them. But anyhow, we have our squeeze set up that we're looking for. We got some upward momentum. We got some triggers there. We're looking for upside potential. Ron, okay, so there you go. I knew Ron was here somewhere. I was like, where Ron at? Ron is the cup and handle master, so I know he got some scans over there for y'all. Anyhow, I like JP Morgan for the long side. And then again, this is a piggyback off of Warren Buffett, the Oracle of Omaha. He actually bought, he actually increased his shares in JP Morgan also. And again, this information is just now getting out now. And you normally have people trying to piggyback off the Oracle. So, again, this setup is just a piggyback off of Warren Buffett. And again, this Saturday, we're going to see, what he has to say about the markets, his whole overall assessment. But we already got a glimpse of his portfolio, which I share with you guys, for all Wall Street Jack Boys members. If you're not a member, make sure you sign up, wallstreetjackboys.com, or join our Facebook group as well, which is actually free. So anyhow, so I like JP Morgan also to the long side. And then Disney. If he can get it to show up, here we go. All right. So then we also have Disney here that is, proposing another setup for us. We have a squeeze that's present. We have buy triggers. We got upwards and momentum. Trend is starting up there. You got a nice little flaggy here. And those, flags, basically, that's the direction that they normally go. So if you guys got the books, with the pattern books that I released for you guys, and you keep those on standby so you can start to identify these patterns. Now, they don't always work out perfectly, of course, because we do have algorithms that we're trading with, which are the computers, as Wes was talking about early, the artificial intelligence. So a lot of the financial institutes are using computers to do the trading. So if you're thinking that, to be a trader, you got to be one of those crazy guys on Wall Street you saw in the movies, that don't even exist today. Everything is done computed. All the gurus are working from home like I am, right? Just like you guys are working from home. And so, basically all, the guys who trade retail. So anyhow, when you have the artificial intelligence, I'm going to tell you guys this now. Artificial intelligence, no patterns. Again, anything that's repeatable, anything that's a pattern, the computers are always going to know it. And so sometimes what you have, one of the greatest risks about pattern trading, and again, I want to do a class for you guys. My schedule is so tight right now, so it's a little tough. Sometimes when we see with these algorithms, that they create these patterns and suck you into it because they know that the traders, experienced traders know patterns, and we play patterns. Suck you in there and then rip your heart out, right? So you say, oh man, I got this set up. It's just the way they show it in the textbook. And then you get in and then boom, you be like, oh geez, Louise, Pierre, man, you lied to me, man. It's like, no, we have setups, we play our setups, but we know our risk and we manage our risks. And so you got to know your trading setup. You got to have your management together. If you don't have those things, I can't advise you to trade. But just keep in mind that that's a risk with all the computers trading, and they trade so much faster and everything for the institutions that they cause a lot of movement. However, we still play our setups, and we just understand the risk that, that could come, with that. Anyhow, so with that being said, I think we got a good 2-3 of them in here. We do have a squeeze set up on biotech as well. We talked about this ago. We got rejected, but we're back up again. This is on the radar. Again, we had here, we got rejected here. There we go. So I think it was in the previous Game Plan Sunday was it the week before, whenever. Anyway, we had the squeeze set up, upwards momentum and everything, but it never cleared this level. It got rejected. It came down to this level as the floor, and it's back up against that level, but you see it's pushing through. So we want to see it clear through. We want to see it clear through this level here, and basically, the squeeze will fire long. Now, I don't like playing biotechs. These stocks are really, really volatile, and they're not as liquid. The spreads are really wide on them. But, if you play the sector, you should probably be a good sector. If you play this IBB itself, that'd be your best route. It's a little more controllable than the individual names in that sector. So that's what I have for you guys for this week. So keep in mind, Wes, tomorrow the markets are not open. Okay. It's President's Day, holiday. All of the institutions are closed. So there's no trading. So you guys get to relax, chill, spend time with family, because that's really important. Unplug from your smartphones, embrace real life. Because again, this is the whole life where we're going into is all artificial intelligence, as we talked about earlier. So anyhow, Monday, you guys just chill and relax, spend time with your family. The markets are going to be closed. Don't stress yourself out. And then we'll resume to trading on Tuesday. And where we basically will, get to some action. Now, the international markets are going to be open. So as you see now, the futures are trading right now. You see right now a little downside action. So overseas, those markets are open. But here in the U.S., our equities is closed tomorrow. So keep that in mind. Did you guys have any questions, any other questions, or any stock tickets you wanted to take a look at before we bring it to a close? Yeah, PayPal. I like PayPal to the long side too. It's a little interesting because of where the NASDAQ is at. So let me just let me look at that real quick. Yeah, I mean, when we take a look at the NASDAQ here, which is, again, this is mostly tech in here. And PayPal is, financial and tech. So, I mean, it's pretty much, in this sector too. We are up against this key resistance level, 200 moving average here for those stocks. And, we have overbought territory. We're in the overbought territory where, these are the levels where you want to short at these levels. Ideally, once you get any sign of weakness, you want to short at these levels. So it makes it a little interesting for me, looking into tech stocks. Because of that level, I really don't want to look into those right now. We got other squeezes like Microsoft too, and they may fire long. And if they do, then we will see that, those will be the ones that's going to push it through that resistance level. But PayPal is, definitely a great setup for the long. So if you wanted some long exposure there, this would be probably the best, stock to choose here, basically, because of the setup that we have. It's a real good one, actually, as far as we got upward trend. We got the squeeze with momentum, a bullish squeeze there. But again, it's, it's kind of tough as it crawl into that overbought territory. It's teeter-totting there. I'm not too sure how well it's going to do. However, if you play it long, you hit this stop here, I mean, two points for the options trade would be good. So we hit this level here of resistance. You may want to, take off, take some off the top And this level here is more apparent. So this is about $97, $98. So about $98. I think then again, the market likes whole numbers. So always, never ignore whole numbers. You say 100 is like the next whole number up above. And my Fibonacci levels, again, we got it's about $98 here, 97 and some change. So those would be the levels that I'll play it to for the long side, again, because as it starts to get, into that territory, now you have more risk that you're playing with. So, but yeah, I still like it to the long side. Take profits quickly, I would say. That would be my thoughts on PayPal. I like it to the long side, so bullish setup, definitely. All right. Anybody else got anything else you want to look at? Yeah, here you go right here, Wes, also on my intraday charts here. So yeah, I got a double line on a 96 here. So yeah, I mean, that's why I'll be looking for I play kind of similar to that if that's what it's going to do. We'll see how it does. Right now, it's pushing up against that 618 on the intraday chart, just like a financials this week. Yeah, I mean, again, financials is not my glory. Financials has been really tricky, and we talked about it in the group throughout the week about how financials messed up, but they're going up. And again, a lot of the stuff happened behind the scenes. You don't get all the full details until months later, weeks later. And, when you see the financial gurus buying financials, that's an interesting thing. We saw Warren Buffett, he's piling up in financials. He reduced shares in Apple. He's buying JP Morgan. He's buying, other banks, basically a lot of banks, but I know JP Morgan was one of those, those big names. And so by the time you get to all the other investors, they're like, oh man, Warren Buffett's buying that. So everybody start buying in. And so you try to get in, and ride the wave up until the next sell off. But those are, it's a good position for that. So yeah, financials tricky, but again, with everything that we know, that's, that's the way I would like to play that. So yeah, so definitely bonds go down, banks go up, bonds go down. You can always play those counter. Any weakness in financials, trade bonds, right? So what else? You guys got anything else? Those who want to start trading, investing. Okay. All right. So my man, Freddie, how you doing, my man? I'm glad that you joined us. My recommendation for people who want to start investing is the first thing that you need to do is to learn how to invest. It's not really necessarily about a platform or anything. You can use any platform to invest or, trade to make money. And so some of us, again, we trade stocks and some of us invest long. Investing long is more, for 10, 20, 30 years down the road for your retirement. And trading is more for generating income. Hey, let's make some money this week. Let's make some money for, next month or whatever. At this seminar I was just at over was I think about 2 weeks ago, I met a couple that was pretty cool. I actually wrote an article. I didn't even release it yet. I got to send it to you guys. But it was a couple that was, I think it was probably like in their late 50s. They was still kind of young, but it's probably like their late 50s. But they actually trade options for a living. Husband was a investment banker for Merrill Lynch, retired. And the cool thing is his wife was actually as knowledgeable about the markets as he was. So we had really great conversation, and they're pretty simple what they trade in. But they trade options for a living, and they pay all their bills once a month just from trading options. They don't work, no job or nothing like that. They got lots of freedom to travel and do things, but they make sure they pay all their money from basically their retirement account. They have an IRA account, trade, make money off of it, pay all their bills from that. So anyhow, so think about trading as like, hey, I can pay bills with this. I can, buy boats and cars and bikes and stuff like that. It's just more, income driven, and trading is investing is more long term. But my advice for you is to learn how to trade, learn how to invest before you do anything. And then once you learn it, then you need to start trading with the paper account before you start using your real money. Again, there's no other profession that you can go in and do this, the way that you can do it in the stock market. Listen, I'd be honored to be your mentor. Pierre Lawson, Wall Street Jack Boys founder. We have a great community here. with lots of members and other people who have their experience that they can share with you. Subscribe to the newsletters, free. Join the group on Facebook, it's free. Where you actually get to see how we actually do this thing in real life every day, all day. That's what we do. And so, yeah, definitely join us, see how you like it. Because a lot of people say, hey, man, I want to learn how to trade. Oh, I want to learn how to invest. And then once you find out that you actually got to learn, then they get the work of learning and then they just give up. They're like, oh, I don't feel like learning nothing. I thought I could just put my money in something and then it could just grow. So I think that the perception of what traders do, I don't know if Hollywood or whoever has made it seem that way, but that's just not the reality. The reality is that you got to learn the markets. You don't need to have money at risk if you don't know what's going on with your money. And so that's what we're doing. That's why we had these sessions. So you guys can know what's going on with the monies. You ride the waves with the money. Anybody else got any other questions here? Ron said energy. Yeah, I think I had energy. Let me see. Yeah, energy sector, again, it's popping through resistance up ahead, which was that 100 moving average. It is going into that overbought territory. But again, when we're in that overbought territory, again, it reminds me of 2017, where we stayed overbought the whole freaking year. And so it was kind of tough to play, 2017, even though it was all bullish. But it was like the prices were overbought. It was like expensive basically, but they were still rallying through overbought territory. So I don't know if this is what we're heading into right now. It is starting to shape out similar to that, where I'm seeing that. And so I would say that if you get into, extended areas, just make sure you know your risk, take profits often, because the greater risk is to the downside. The greater risk is to the downside. Versus the upside, just because of that resistance level. So I would like to see it clear. It is punching through it. So we'll see how it goes. If you're looking in the energy sector also, I think there's OXY was a ticket that I was taking a glimpse at earlier. This might be an interesting one for you. It's got a little squeeze on it. But again, it's still got that 100 moving average up above. So just keep that in mind. I know you the king of those, so you know what that is. Shorts, I don't have much to short on the list, because looking at the NASDAQ, seeing the NASDAQ up against those extensions, see NASDAQ up against extensions. I mean, ideally, if I'm going to look for something short, it probably had to be around in this zone here, just because of that that extension there. And what I would like to do, I guess, let me see. This is something that I was looking at. Now, Momo, it's an interesting one. Hate to be the one to short it, but let me just remove this. If you see it tried to pierce through that 100 moving average and it got rejected. So it's an interesting setup to a short side. But we clearly see, we saw it, punch through, but get rejected back down, test it again, hasn't cleared. I do have a trigger to the downside here. I do have a squeeze. And then my stochastics is actually turning downward on there. So, if I'm looking short, it'll probably be in something like Momo. And let me give you one more. And then NetEase, maybe also another one. This is a little choppy one. Now, this is an interesting thing. You want to actually see this break this level. If it break, under that level. And again, you got earnings coming up, so you might want to play it up into earnings. I don't know what's going to happen to it after earnings. You know how that can go. But we saw it get rejected here. It's like that triple top setup. Boom, boom, boom. Kept getting rejected. And then we see further rejection down here. So it's like, okay, so it's getting more rejected. And it snapped actually through, but then it came back up. So there's weakness in this one here. And so those will probably be the ones that I would look more to the short side. If you guys see anything else in the markets, man, definitely share, with your comrades and colleagues. And we'll have further discussions through the week whenever I can catch you guys. My workload is very heavy right now, so I'm trying to get as much as I possibly can. But definitely, I appreciate everybody that joined the session here. And definitely, man, if y'all know anybody who will benefit from what we do here at Wall Street Jack Boys, send them over, invite them in. Hey, this is what we do. If you want to know what trading is really like in real life, for real traders, not people who just talk about buying Bitcoin and ride it to the moon. That's not trading. That's not a strategy. So anyway, this is not luck. This is real work that we do. If you want to get that work, you want to learn that work, come join us at wallstreetjackboys.com. With that being said, I'm ending tonight. I'll catch you guys.